There are a lot of events on investors' minds this week, most notably the US FOMC interest rate decision. The US Fed did hike another 25 basis points as expected to between 5.25 and 5.5%, leaving rates at a 22-year high. Jerome Powell left the door open for additional policy firming in September as they assess the cumulative impact of interest rate hikes and the variable lag effect on economic conditions. Notably, there seemed to be a shift in risk management from previously not raising enough to a more balanced approach going forward, as inflation has moderated down and real rates having turned comfortably positive. Elsewhere in macro, Conference Board consumer sentiment came in above expectations, whilst flash manufacturing PMIs came in better than expected at 49 versus expectations of 46.2, adding fuel to keep the September interest rate meeting live. Investors will be keen to monitor a flurry of other economic data this week, such as the PCE core deflator that is expected to detract to 4.2% from 4.6% in June, and the latest GDP numbers for Q2. In contrast, the European Central Bank is priced to do one more hike this year after the expected 25 basis points increase this Thursday. But weakening indicators such as the PMI and GDP in the Eurozone indicate that this week may be the last. Elsewhere, the Bank of Japan remains hesitant on raising interest rates as inflation is expected to moderate lower. If we couple these factors with the recent 12% spike up in crude oil this month, we could have an outcome that provides support for the trade-weighted dollar, the DXY, especially as the US economy remains comparatively more resilient. This complicates the picture for risk-weighted assets such as Bitcoin, despite the Fed nearing the end of its goal to curb inflation. Follow CoinShares for more insights.